Hello and welcome to Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about GEVO Incorporated, traded at Nasdaq, ticker name GEVO. Well, GEVO today did show kind of a white candle, but it started from lower levels, meaning that it was actually first decline in the opening, but then it just recovered and stopped just at moving average 20, the green line. But overall, if you look indeed at the trading, this is very remarkable. You see that it was almost a flat trade. Only by the, let's say, second third of the trading session, we see increase and the price was sitting there. But after hours, we are minus 7%, so sitting at 877. And for a company with market capitalization of 1.5 billion, this is, of course, a remarkable decline after hours. Being 877, it means that we are almost back to where we were. So looks like this was just kind of a false recovery and we will go lower. So in general, what it looks like a secondary wave downwards. We will now talk about it, what it is and how to play here for GEVO. Overall, of course, we can say GEVO is ongoing a correction, a longer period, maybe forming triangle. We will see. For midterm traders, this would be very important information. But it's still a bit wait, let's say, for the moment, for better opportunity, but it is coming definitely. So let's do a quick analysis for GEVO. As always, first of all, this is a daily chart and we have three moving averages depicted. These are moving averages 20, 50 and 200, being green, blue and red line correspondingly. Here on the left you see their legends. So if you look at them, you can see that already from mid of February, moving average 20 is declining, making this way actually a first indication of a major correction. And today not today actually, two trading sessions ago, we formed a magic cross down when moving average 20 hit from the top moving average 50, while moving average 50 and 200 are still kind of going upwards, but they are almost bending. So they still didn't start, but they are going straight, meaning that their second derivative is zero, so there is no acceleration or deceleration. And now market is waiting what it will be. Will we see the further continuation of decline of moving average 20, which will cause then also moving average 20 and 200 to follow, moving average 50 and 200 to follow, or we will see kind of waving, recovering, which will also cause moving average 50, the blue line also to wave, which will mean the formation of the triangle. A similar situation was seen by period of mid-August, let's say, and almost end of November. You can see they started to wave almost around each other and formed a very nice triangle that period, which then resolved very positively at the end, you can see. So this could be a similar situation forming if indeed the price will start to wave. But if the price instead of that will really go down and moving average 20 also will go down much harder, so this scenario, this would mean that we are about to have a secondary declining wave, so going even lower than previous lows. So it will be a major correction and a stronger decline. In both cases, there is a way to make money. If you wait in time, you slowly enter, assuming those things coming, and then you can actually do the nice trades. Still, why it's too possible, another indication is MACD. If you look at it, it is indeed recovering. You can say, oh wow, it's actually almost touching the zero from the bottom, so it is about to go bullish. But there is one important thing when you are looking at MACD histogram waves. This wave is recovering not like this, but it's recovering like this. And this is very important because this part here, it means that the second derivative is actually smaller than zero. So it is indeed recovering, but recovering with deceleration, meaning that it could lose its steam and its power while touching the top. So it can make small positive wave and go for secondary negative. If this is going to happen, indeed, this would mean more decline. And then this declining trend that we saw, which is heading all the way towards moving average 200, let's call it R1, will be confirmed. And if it will be confirmed, then we know actually what to do. We know where to enter. It will be actually the channel from 5 to 4, a bit lower to enter, but if not, then it could be rebouncing. So we will see, but definitely we can see that this opening, let's say, descending channel where this part is This line is R1, today R2. Now today was confirmed, and after hours is also showing its confirmation. So if tomorrow we see further decline towards, let's say, levels of somewhere 7 or lower, then we know what is coming. So with this being said, how to trade? Because tomorrow it's still possible we will pierce this upwards, or at least we will stabilize in the vicinity of level 7, which is another strong support. So in order not to lose both opportunities, we just need to be prepared for an action in both cases. So therefore, the first entry here would be advised just below today's lows, which also forms a very nice support level. If you look here, it will be between 8-10 and then all the way to 7. Write it here and draw it first. So this would be this first channel. This is hoping that the moving average 20 and 50 will start waving around each other. So this would, let's call it a scenario 1. So if this is going to happen, then we know that price will wave and we will start forming triangle. And scenario 2 will be if we really go, let's say, really low. So first, scenario 1, if it's happening, in both cases we need to be prepared. So we can enter already on the decline, and the price to enter would be between 7 to 8-10. Yes, it is quite broad channel, of course, but also if you look the price action, the price variation is also enormous. We are declining already from the level of about almost 16, and therefore the channels are also quite broad. So when you enter to the channel, you also need to do it wisely. We will later at the end of this video discuss how to do it. So this would be the first entry, and then if we rebound, if indeed the scenario 1 is taking place, there is plenty of room to rebound. Most probably will go all the way until 12. I don't think higher, because then there is a major volatility around this area, and still it will make us an opportunity to make really nice profit. And we always, speaking of profit taking, at our channel, in our opinion videos, we discuss and let's say advise taking profit at 10 to 15%. This is really important. Some people say, well, you are too cautious, maybe we can take longer. Yes, you can try, but what is important and what we think is the way to build a positive portfolio and strategy is take profit in time, then re-enter, check other opportunities, and try to find patterns. Try to find these situations where you are definitely certain that you will trade with profit and make the profit. If you can do it multiple times, it means you developed your way, you developed your level of professionalism, so you are indeed a trader. If you are always hoping for casino, fortunate for making money from one trade, well, that means that it's still maybe too early to say that you fully understand the trading strategies, and it's very risky as well, because if you stay too long, you just take your losses. So taking profit in time is very important feature, very important, let's say, strategy, and you need to develop it. You can hear it many times, but until you develop it yourself, it will not happen. So that would be, coming back to the analysis, the first level to enter is from 7 to 8. If scenario 1 is confirmed, you can take the profit of 10-15%. If we decline further, so the scenario 2 takes place, meaning the opening channel R1, R2 is indeed confirmed, and we need to seek for somewhere to enter at the level closer to R1, then we need to wait, of course. And waiting period could be a bit longer, because we need to wait all the way until we reach really a significant, let's say, support levels. In this case, it would be the line just above 5 and all the way to the 4. By that time, moving average 200 also will be there on the bottom of this channel, because it will work there also as a double support. So it will be a very nice double support entry opportunity here, and will make it end of technical correction, because usually moving average 200 works strongly for technical corrections as an ending, and then we can have again a bigger triangle formation, or actually returning to the levels of 12 again. So this would be for midterm traders very important point to engage, and the levels would be between 4 and 5.10, let's say. Again, once there is a rebound, whenever your complete portfolio, your complete funds engaged to this portfolio give you 10 to 15% profit, take it without a doubt. and then re-enter. There are many videos we discuss daily, many opportunities. You can also check all the videos at the channel, especially if the situation there also going to the levels of second or third support, you will be just in time to enter and make your money as well. So that's the trade if there is a purely technical correction. What if there is a negative catalyst? Because this is also important. Trading is not only looking at charts, it's not only looking at technicality. It is part of it, yes, but trading is also a real world. A real world meaning that something can happen to the company. Company is not just a ticker, it's not just a combination of oversold, overbought parameters and all other indicators that are there in hundreds on market. So it's company, it's people, it's things that it does. So therefore, a negative catalyst might kick in. And whenever it kicks in, you cannot predict it, first of all, and you never know how low it might be or what it could be. And of course, if you really want to understand it, you need to do due diligence, really diving into the company. But if you don't have time for it, or it's just part of a strategy, you would like to mitigate risks quickly, you just need to look to the very principal support level where the price could go if there is any negative catalyst. And if you look here, of course, you can easily see that this principal level for this chart, for this stock is here. And if any really very bad catalyst comes, very bad news comes, then the level S1, S2 will work here as a very principal support line. The reason for that, it was confirmed 2 times, once in August by spike and secondary. It worked by mid of December also, and it was formed as a very well formed channel also during the upwards move during December, actually here and here it formed also this U shape. So this channel seems to be very reasonable for possible average down if any negative catalyst kicks in. So again, you can enter there. And by the way, it will also be a continuation of kind of major support levels, because as I said, S1, S2 is very strong support here as well. I don't think it will go any lower because it would mean more than 10 times decline, and this would be just ridiculous. But this level is very reasonable for any bad kind of doomsday scenario. Again, it's not we say price goes there, it's just we want to mitigate risks if it goes there, while others will be taking losses or cutting losses by, let's say, stop loss strategies. You will just enter there and prepare for spike back. And again, because this is extremely volatile stock and this short time period of 4 months, the levels are quite low. But again, when we reach there, if we reach there, I hope not, but if it happens on the rebounds, again, I repeated, profit price target is 10 to 15%. Once you have it, just enjoy it. So that's, let's say, the trading card for GEVO at the moment. So this is the numerical. If you are more for graphical representation, you can look here. And speaking of how to enter, as I said at the beginning, how to enter to these broad channels, we will now discuss it. So first of all, the strategy to enter to buy and average down is 1, 2, 2. It's a non-linear averaging down. Non-linear means that every time you buy, you want to buy differently in a way that your current price will be closer to your current so your current average price will be closer to your current entry. And with this being said, because it's still also very positive, very bullish stock, on a midterm, we advise 5 portions entry, meaning that money you would like to play here, you can split in 5 portions. Then you buy with 1 portion in the first channel. If price declines to the second one, you buy with 2 portions. And if it goes with negative catalyst to the third line, S1, S2, to the third channel, then you can average down again with 2 portions. This way, it will be best optimization and mitigation for risks versus profit, and it might take a bit longer time if it happens, if we go to the third level, but these are principal levels and they should lead you to a profitable trade. Because that's part of our so-called mixed analysis. There are in general 2 ways to trade. So one is the fast trading, when you take losses, you do your stop loss, and another one is a slower trading. Let's say still it's a daily trading, but it's a little bit slower. You are not sitting on your screen 24/7 with 15 minutes candles, but you just do it occasionally. And there you bet not for time, but for profit. Therefore, you say it might take a bit longer for me, it's okay, but I want to exit with profit or at least with a draw. And therefore, you take these very deep support levels and you just do this kind of analysis. So That's part of our strategy. And if you like this approach more, rather than being fast at checking different opportunities and using actually stop loss strategy, then you can play it here. So with this being said, that's actually all for GEVO at the moment. We will see tomorrow will be very decisive action, which will lead us either to scenario 1 or 2, but in both cases, with this strategy, it should be quite nice mitigation of both possibilities and actually a way to make profit, again being 10 to 15% as a target overall. Of course, you can make more, but we always do it like this. We do always hard stop on profit if it's 15% and then just check somewhere else another position. So that's all for GEVO at the moment. Good luck with it. Also, please don't forget to subscribe to our channel if you're first time watching this video. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.